Here at Toulon Farm in Bathurst, Nuffield scholar Michael Inwood is farming merino lambs. He's noticed that the culture of the local community has been changed by the increase in foreign investment and says that more data about the extent of investment needs to be collected. But he believes that it's all part of the industry's future.
Historically, Australian agriculture basically kicked off through foreign investment. We've always had a percentage of foreign investment here, so it's not the case that it's a bad thing or it's a good thing. It's something that's part of our mix. I think that we need it to be measured though, because it's very hard to understand where we're going if we don't know the state of play as it stands.
Michael feels that Australian produce may be compromised by the decentralisation of farm ownership. If decisions are made by profit-driven corporations or investors, it may draw the focus away from quality, nutrition and sustainability.
We've also had the buyout of the Edgells plant locally by Simplot. Now that was an existing business that obviously Simplot felt was a good match for their international business. Every time this happens though, like with the buy-up of a local business, there's rationalisation that comes in, and I know that certain aspects of their production are not undertaken as they were before.
Michael is also committed to sustainable farming practice, including the use of an all-electric car and the implementing of non-disruptive sowing methods.
So this is, the machine comes along, it opens it up, drops the seed in, and then the little press wheel in the back just pushes it down, and you've done nothing. The other part of that reason that they might want to invest in Australia is also an issue of food security. So where you have countries who are looking at trying to shore up their food supplies in the future, then, say particularly China or other countries of high population, they might look more favourably at investing here for all the above reasons, but also the fact that they're trying to secure food production into the future, and with world population predicted to hit 9 billion by 2050, that's probably going to be a major influencing factor as well.
And while commercial farming methods may produce a bigger crop, the risks are beginning to emerge. In the US, livestock that are grain-fed are proven to have lower omega-3 levels than those that are grass-fed. And while grain may be cheaper for big businesses, it means a less nutritious product is reaching consumers.
For example, we're seeing quite a lot of Chinese investment in sugar processing in Queensland, and the major buyers of sugar are the Chinese, because the Chinese consumers are getting an appetite for soft drinks which require sugar. So there's a logic to the way the system works.
But, as Michael mentioned earlier, information on the extent of investment is scant. The Foreign Investment Review Board only investigates and registers purchases over $244 million, but very few Australian farms actually cost that much.
And the irony is, of course, that if an overseas investor goes to buy a one-bedroom apartment on the Gold Coast, they have to register that, and that creates a notation so that you can tell how much Queensland real estate is owned by foreign investors, but you can't tell how much farmland or how many farm assets are owned by foreign investors.
Butcher Grant Hilliard believes that there is also a lack of investigation into the claims made by producers about the origin and quality of their product.
You know, I don't think there's enough sort of examination of the claims made from any of from growers and from wholesalers and providors, and you know, there should be a much more greater level of scrutiny. There's Jonathan Safran-Foer writes, I think very convincingly, about maintaining the line of sight between the producer and the consumer, and it's a phrase that we like a lot, because line of sight is very important. And so when last year the Indonesian thing happened, and you know, for us that was a perfect example of when the line of sight breaks down, and when you've got production in northern Australia and consumption in regional Indonesia, there's a fair chance that abuse will happen along that line, because you're getting further and further away from production.
There has been public concern about allowing foreign investment at a time when a global food crisis is possible, but Jim Harrowell says that there are many benefits that arise from developing a relationship with strong economies like China.
Inbound investment, there's certainly interest by Chinese enterprises in buying into agricultural enterprises here in Australia. What are the benefits to Australia from that? Well, it injects new capital. Most of the Chinese enterprises are interested in a vertically integrated operation. So if they're producing cattle here, that cattle will be, the beef will end up being sold back in China. So we've got a lot of competition in China. A lot of people keep saying China saved us from the global financial crisis. And we in Australia think we're very important to China. We're certainly very significant. And China is our biggest trading partner, but we're not their biggest trading partner. And in this Chinese year of the water dragon, I keep reminding people that we are riding the dragon, but we're not actually sitting on the head or the shoulders. We're probably on the tail. But we've got to be really careful to work at the relationship so we don't get flicked off.
Nathalie Jones reporting, UTS News.